What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so not miss future videos. So I found a cheap dividend stock to buy, and I got a tip off. I'm going to give a shout out to that individual after this introduction. I'm absolutely interested in this dividend stock. When people recommend dividend stocks, I like them so much that I buy them. And it's going to be incorporated in my M1 Finance dividend portfolio investing strategy because I like high income stocks to buy my other quarterly dividend growth stocks. And it excites me a lot to see this type of dividend stock. It's very rare to find. So let me know at the end of this video if you agree with my purchase. And if you have a counter offer, let me know. If you're new to this YouTube channel, make sure you subscribe and hit the notification bell so not miss future videos. Smash that like button. Let's check this stock out right now. First, I want to give a shout out to the Dividend Monster, Greg. So he has been on Ian's videos. So Ian, he was just on Ian's video and Ian interviewed him. So he's a well-known investor. He's retired on dividend income. So if you're on Instagram, make sure you check him out. The Dividend Monster. I mean, he has a really good attitude, very good philosophy when it comes to investing, and he's always adapting, and it's very exciting to see his dividend income grow. I mean, look at this. Right now, I'm click this. I mean, he's got a lot of JEPI, NLY, OCSL, WPC. So his dividend income is pretty solid. So, I mean, it's very exciting to see somebody retire on dividends, and he has everything made. So check that out when you get a chance. Now let's check out the dividend stock he gave me a tip off to. And that dividend stock is Brightspire Capital. It has a dividend yield of 11.66. Whoa! Let's do some digging. PE ratio 7.25. Remember, this is a real estate investment trust, so FFO is more important. Average volume 564.47K. The market cap is 884.70 million US dollars. Year range is 613 to 1042. Its day range is 677 to 701, and its previous close was 698. What makes these guys so special? Let's check this out. Okay, so look at this. Brightspire Capital is an internally managed commercial real estate credit REIT focused on originating, acquiring, financing, and managing a diversified portfolio of commercial real estate debt and net lease real estate investments, predominantly in the United States. So let's check out their portfolio real quick. The Brightside Capital is one of the largest publicly traded commercial real estate REITs worldwide. I'll go over their portfolio overview real quick. Their portfolio is comprised of a diverse set of commercial real estate CRE assets across the capital structure, including senior mortgage loans, mezzanine loans, net leased real estate, and other real estate properties, and CRE debt securities. We believe the scale of our portfolio provides a competitive advantage by providing significant portfolio diversification, economies on a scale, and exposure of proprietary transactions. So this is what they have. 84% is their loan portfolio, 13% is their net lease and other real estate, and then the CRE debt securities is 3%. So based on their portfolio information, it's based on a gross book value at their share of September 30th, 2022. They put in parentheses, includes impact of accumulated depreciation and amortization, and excludes the impact of general CECL reserves, and excludes CRE debt securities, except in the case of investment type chart, which is based on a net book value at our share and includes CRE debt securities. Metrics shown were not prepared in accordance with the USG AAP. They all have to say that in all those. So now we need to understand, okay, they talk big game. Are they walking? So we need to see how they're doing revenue. Because remember, the rules of a real estate investment trust or business development company, I say this every time I do a video on a REIT or a BDC, 90% of what they make go back to investors. So let's see what these guys bring to the table revenue-wise. So let's check out their revenue. This is in millions US dollars. 2015, 112, 2016, 116, 2017, 143, 2018, 297, 2019, 353, 2020, can blame the pandemic, and then 2021, 224. But let's keep on looking closer at the recent revenue as well. So in December 2021, the revenue was down 57.05%. Net income went up by 254.44%. So the revenue is 86.06 million. That's pretty good for a quarterly financial. Net income was up and it was at 81.04. Diluted EPS was 0.63. Net profit margin 94.18%. Operating income went down by 60.41. And again, that was December 2021. But wait, March 2022, revenue was up 2.91%. It was at 78.41 million. Net income was up by 130.03%. So that was 27.72 million. Diluted EPS is 0.21. Net profit margin was up 35.36. So it was 129.19. Operating income was up 50.26 million, and it was up 20.19%. Then looking in June, the revenue was up 106.05%. So it's 85.37 million. Net income was 34.29 million. Diluted EPS is 0.26, and it was up 273.33. Net income was 273.87%. It was up. Net profit margin was up 184.37%. Operating income was up 643.55%, and that was at 47.92 million. Net change in cash was 78.85 million, and that was up 140.17%. But September still revenue 97.15 million. So there's a little bit of a negative right here for net profit margin, but the revenue's still up. That's one thing that still attracts me a little bit. Now, it was down a little bit for net profit margin, net income, but I'm not too concerned. And again, this is a high risk dividend stock. There's a high yield in it. So, there's a risk there. And again, this is not financial advice for entertainment purposes only. Disclaimer in the description. The revenue has gone up. That's the thing that really attracts me the most, because they're making money. They weren't making money in their real estate investment trust like AGNC. Why would I invest in them? I don't see any. There wouldn't be a chance of a dividend hike. There would be, there was one like Capital Finance. A lot of people loved CPTA as a monthly dividend stock. They pretty much fell off the radar. There is a dividend stock. Nobody even talks about them anymore. But the revenue is going up, and I'm going to show you their dividend history. So this is one of the high yielders. So right here in 2021, it was 14 cents, 7/15/2021. 1/4, which is the start of 2022, is 18 cents. Then April, it was 19 cents. And then 2022 is 20 cents. There is a little bit of dividend growth. There's a few pros and cons, and I'm going to take a risk with some of the cons. One, these guys have yet to be really challenged. If we go into a recession, these guys may not respond very well. Two, they're new. We haven't even seen a dividend growth history that's really significant. And I took a risk on AFCG Gamma and all these other high yield mREITs, the Mary Jane REITs, and I'm going to take a risk on these guys. There's always a risk when it comes to high yield dividend stocks, especially cheap high yield dividend stocks. IVR, for example, did a reverse stock split. A lot of these mREITs did reverse stock splits. There could be a possibility of a reverse stock split if their share price goes down even more. So that's one thing that I want to bring to the attention. There is a risk there. And again, I'm going to make this clear. This is not financial advice for entertainment purposes only. Disclaimer in the description. This could blow up in my face. So I'm just making that clear. This is one, when it comes to dividend growth, Reliability, not the best. I'm doing this for income. I believe that Arbor Realty Trust is a lot more stable than these guys. Sachem Capital, I think, is a little bit more stable than these guys. So there's a risk. Now, putting money in these guys, if the dividend growth is there and the revenue keeps on going up, that's fantastic. I can buy more of my quarterly dividend stocks. I can use that passive income with these guys to buy my Starbucks, to buy my Pfizer, which I just got like X amount of dollars with Pfizer today. I think like 9 something. So that, or I could buy IIPR, and IIPR can buy the other ones. And then I can lower the percentage on some of those once I get to 100 shares and add Pepsi or add, some really good dividend growth stocks. AbbVie. Not at the point where I can add AbbVie. I want AbbVie at actually a high percent, so I can have these dividend income stocks like these guys, have enough shares to buy AbbVie, then just keep on going. I mean, that would be beautiful. That's my strategy with my M1 Finance dividend portfolio. High yield stocks, high yield dividend income, high yield passive income, and have that buy my quarterly dividend stocks. Now, this could completely blow up in my face. I just wanted to make that clear. So let me know what you think of this video. If you are new to this YouTube channel, make sure you subscribe and hit the notification bells so you don't miss future videos. Make sure you follow Greg on Instagram. And he's a very solid guy, good guy, except when the Browns play the Bengals. That's the only time we don't talk. Which Bengals will probably beat the Browns this week. Not a surprise. So you guys take care and have a good one.